Hey, family, and welcome to Talk to Me Tuesday, a safe space where we talk about credit, money, and consumer rights with no judgment, no shame, and no confusing language. If you're learning, rebuilding, or just trying to do better, this is a place for you. Real topics, real tools, and no scare tactics. Just honest conversations we should have had a long time ago. So, like, share, and tag someone that you know who needs this. All right, let's talk. Today's topic is the five factors that make up your credit score in plain English. So, if you ever looked at your credit score and it seems random, it's not. There are only five things that control it. So, kind of think of it like a report card for your financial health. So, how you borrowed money depends on these factors and how much it costs you to borrow that money if you can get it. Most lenders use a FICO scoring module, so that'll be the one that I spend the most time talking about. There's also the Vantage model, and that's what you see on Credit Karma. Throw that out. And while the formulas are complex, the ingredients are not. So we're going to talk about it kind of like weight. That way we kind of get it, okay? So the first factor that goes into this is your payment history. It's about 35% of your credit score. And for me, since I'm on this new weight journey again, I like to use something my trainer said. You can't compete with what you eat. It's the biggest impact to the score. I don't care how great your how low your balances are, how much you do everything else. If you don't pay your bills on time, you're never going to have good credit. So, number one thing is your payment history. It is the biggest part of your puzzle. It's really simple. A single 30-day late payment, it shows up. So, never, ever, ever be 30 days late. Same thing with collections, bankruptcies. Even one late payment can drop your credit score by as much as 110 points. So, pay every bill on time, every time. Number two, amounts owed. This is like getting up and going to the gym. So if you eat right and you go to the gym, that's about 65% of the whole weight loss thing, about 65% of your credit. Eating right, going to the gym, right? So this is often called credit utilization. So if you don't know it as amounts owed, credit utilization is the best way to do it. And it just measures how much credit you have available. So for every $1,000, don't let it report more than 300. Under 30% is the goal, 10% is even better, and under 6% is where the sweet spot is, okay? So sweet spot 6%, remember that. So, number one, payment history. Number two, amounts owed. Number three, length of history. So that's about 15% of your score. The thing that helps me remember it is consistency beats intensity. Doing it repeatedly will beat doing a lot really good the first time. What that means is don't go open up a whole bunch of accounts. Sometimes you'll open an account and say, I wanted to report, so I'm going to get this loan for 3 months and I'm going to pay it off and I'm going to do it again. I'm going to do it again. No, you just borrow from a whole bunch of people and it actually looks bad. It's like that first week at the gym for me. I'm like amazing the first week. Like I am a first week killer. Week two, not so much. But I'm learning to remember consistency beats intensity. So rather than doing all the machines for that first week and then, quitting, I go 3 days a week and I'm gonna get on my little elliptical and I'm gonna be happy, sing a few songs, and I'm out. It works better. So consistency beats intensity. Length of history, do it for a long time. So number one, payment history, 35%. Number two, amounts owed, 30%. Number three, length of history, 15%. Number four is your credit mix. It's a balanced diet. You gotta have vegetables and protein. I'm not a big protein person. I'll eat all the vegetables and please give me extra carbs. But whatever, we're not talking about me. We're talking about the new me. And the new me likes the protein and occasionally a carb. Occasionally a carb. Yay. Right. So balanced diet. Same thing with your credit. They want to see balance. Creditors don't want to see you out there with 25 credit cards, but you've never had a loan in your life. Or the only loans you got is student loans. Show them some balance. Get a couple credit cards, get a car loan, get a mortgage. Homeowners, we're going to be homeowners, mortgage, okay? So you want to have the balance because that says I'm responsible in multiple ways. Finally, so one, payment history, 35%. Two, amounts owed, 30%. Three, length of history, 15%. Four, credit mix, 10%. And then finally, the one that we hear the most about, 10% new credit. Favorite thing we call is inquiries. But for me, it's cake. So every once in a while, I can get some cake. If I've been doing my thing this month, and I've been doing my thing, I can have a piece of cake. I like the nothing but cake. I can get me one, the mini, not the whole one, just a little piece, just a piece of the cake, not the whole cake. Same thing with your credit. It's okay to get a new credit card. It's okay to apply for a loan. It is not okay to do that every week or to get six or seven or 10 of them. One or two inquiries per year per bureau. That's like six times a year. That's like more than my trainer lets me get cake, but that's a whole nother conversation. So the biggest thing is this: one, payment history. You can't compete with your payment history. If you don't pay on time, forget about it. Number two, amounts owed. Can't charge too much. Number three, length of history. How long you've been doing it. Number four, credit mix. Keep it balanced. And number five, new credit. Don't eat too much. Just a little bit. Every once in a while, it's a little reward. It's not an everyday thing. Okay. So your credit score isn't about your income. It's not about how much you make or how much you bring home. It's about how you manage what you borrow. Master those five things and you'll master your score. So, in the comments, I want to know which of the five surprised you the most, or are you like already a credit jujitsu master and you knew all of this? So, I'll be looking out for the comments, and of course, I'm going to respond back. Now, before we log off, I want you to remember this: your credit score does not define your worth, but it does affect your options. Around here, we're about creating options. This is all part of the 750 score challenge, which is progress, not perfection. Now, and because wealth starts with ownership, we want you to own the knowledge. Whether your goal is to buy a home, start a business, or get you a millie, it all begins with learning the system instead of letting it use you. So if this helps you, share it with someone you love and comment so we know we're here and come back next Tuesday because this isn't just a talk, this is a community. Same time next week. Talk to me.